Good morning, everyone, and welcome to the European crossover webinar. And we did go in and see the euro go in and take out the stops above 19. Didn't get too far above 19, but we did take out those stops. We did make it up to 1916, and actually finally seeing a little bit of a pullback here. But we'll have to see how we finish up for the day. But we were able to go in and trigger those stops, although it didn't last too long. We had resistance at 1927 and 1954. We're also seeing the dollar come back a little bit here. And looking at the data for today, we did have German industrial orders come out. Came in somewhat better. Look at this, 27.9%. And Italian industrial orders just came out. They also outperformed. And then we do have market PMI for UK data, and that's going to be due out at the bottom of the hour, and then with Mexican gross fixed investment. And then at 7:30 a.m. Eastern, we do have challenger layoffs along with jobless claims. Tomorrow's going to be the big mover, non-farm payrolls. So relatively quiet today as far as economic data. This out of the way. And as I mentioned, the obviously the euro came up and did gun those stops. We were able to take out those stops from yesterday and add them on. Previously, we'd come up to, I think the high was 1908. We came here, we was able to push it, not a whole lot higher, but we were able to push beyond 119. And we've gone in, as I mentioned, gone and paired back a bit. Cash dollar index coming off of these lows. We could actually we could even just have these listed across the board, actually. Here's on the 2-hour chart. And let's go on and take a look where we stand here on equities. And we've continued to go and push higher, but we stayed in a relatively tight range here. I think yesterday, I think it was Jane that posted on there that it was the lowest amount of shares traded in the year this year for 2020 yesterday. And you can see here, we've just been very, very quiet. S&P's pushed up, continue to push up a little bit higher, but once again, still very, very quiet session. Just sitting here, not a whole lot of movement, confined, as I mentioned, within a very tight trading range. If we take a look at gold, continue to push higher still here, even in gold, and we'll jump back there. Tell you what, we'll just go in and drag that over here and make it a little bit easier. And look at this. This gold market just still keeps pushing along here. So actually been so far now let up with one of the problems, or if one call it a problem, has been this weaker dollar, which has added on further fuel to gold, which really has a lot to do then with the interest rates that we're looking at, and those rates are lower. So it's just one fuels onto another, and you see that the dollar gets punished. That opens the door for gold, but the lower rates environment opens the door for gold to continue to move, and then it gets exacerbated with a weaker dollar. But as you can see, we're just edging back just a little bit, but it's in a very quiet session here. You look at here with the Nasdaq. We're going in, take a look at the stories. Dollar struggles ahead of job figures as investors fret over the U.S. recovery. The dollar struggled on Thursday under the weight of worries that U.S. economic recovery may lag other countries due to the high level of coronavirus infections as investors look to upcoming data on the U.S. labor market. The dollar index against the basket of currencies stood almost at 92.81, having fallen more than 0.5% in the previous session to approach its 2-year of 92.53 market last Friday. Dollar selling seems to have resumed. We're having the same structure we saw in July, said Shinichiro Kadota, with Barclays. Decline of the U.S. currency have gathered pace since late July on the rising perception that the U.S. economy recovery could be hobbled by the country's poor performance in containing COVID. The euro changed hands at 1869, having gained 0.5 or 0.5% in the previous day's trade to stand just below Friday's high of 1908. Obviously, we did push up to 1916. The common currency held an upper hand against the yen at 125.25 yen to euro yen. The dollar extended its losses the previous session after data showed U.S. private payrolls growth slowed sharply in July, suggesting the labor market recovery was faltering. A separate survey by the ISM has also shown U.S. Services industry activity gained momentum in July as new orders jumped to a record high. But here too have hiring declined, stoking worries about the upcoming job figures. On Friday, government data is expected to show payroll growth slowing to 1.6 million in July from 4.8 in June. With more than 30 million people on jobless benefits, recovery in employment is seen as critical to the U.S. economy, with many investors counting on another fiscal stimulus to support the economy. Top congressional Democrats and White House officials appear to harden their stances on the new coronavirus relief legislation. However, as negotiations headed toward an end of the week deadline with no sign of agreement. I can expect the deal will be reached before Congress will adjourn on August the 10th. So far, there are few signs of compromise, leaving the markets unable to react, said Masafumi Yamamoto. If the two sides reach a middle ground, the dollar could rebound, he added. Sterling also edged up near Friday's 4.5-month high of 31.70. The Bank of England was set to hold off from taking further action its policy review in the day by keeping its benchmark interest rate at an all-time low of 0.1% and its bond buy stimulus program unchanged at £745 billion. The dollar sank to its lowest in half a year against the Canadian dollar at 32.73. Plummeting U.S. job yields, especially in inflation-adjusted terms, are undermining the attraction of the dollar, which had boasted the highest yields among major currencies before the pandemic. It's difficult to buy the dollar with such a decline in rates, and it's understandable how gold is being bought to substitute for the dollar, said Yukiro Ishizuki. And that's what we were just talking about. It's like one's feeding on top of the other. You get the lower rates, which is that lower rate environment is certainly aiding and abetting gold, but then you see the move even further exacerbated as the dollar weakens, and it's just one on top of the other. And just some others on the Aussie dollar. New Zealand dollar and Aussie dollar seem leveling off after the climbs. Analysts have upgraded forecasts for the Aussie and New Zealand dollars in the latest Reuters poll, but still lag the market as investors increasingly wager on the lasting downtrend for their U.S. counterpart. The Aussie was supported by the relative outperformance of the Chinese economy, which continues to suck up Australian resources and boost prices for key exports, including iron ore. That has gifted Australia with the largest current account surplus in decades, providing a net inflow into the Aussie. Perhaps more importantly, the U.S. dollar was having troubles at home with rampaging coronavirus infections. The global economic revival underway is one where the U.S. lags, not leads the rest of the world. It implies a weaker dollar, said Ray Trill. Our forecasts have been revised to reflect our increased conviction that the recent weakening of the dollar is for real and has a fair way to play out for the overcoming couple of years at least. He now sees the Aussie reaching 74 cents by the end of the year and 78 by the end of 2021 and 72 at 70 and 75 respectively. The New Zealand dollar has benefited from similar forces, though again, analysts polled seem to think it's topped out for the moment, pulling it at 66 even 1 month and 65 in 3. And on to cable. The sterling strengthened to a 5-month high against the dollar, headed into the 132 mark after the Bank of England indicated any move to cut rates below zero was not an imminent, despite the economy's slow recovery from the coronavirus hit. Much of the gain in the pound came shortly after the BOE announcement. The currency rose as much as 0.5%, extending its gains to a run of up to 31.84. Overall, the BOE's economic outlook is relatively less dovish than expected, and the absence of a strong signal in favor of the negative rates opens the door for further pound gains in the near term. BOE said policymakers are unanimously voted to make no changes to the key interest rate. And lastly, taking a look at the dollar versus the euro looking out. The dollar's supremacy of well over 2 years has turned sharply, and the current downtrend will continue into next year as expectations of the U.S. Recovery is flagging, especially compared to the Europe. Buttressing the euro, Reuters poll showed a surge in coronavirus cases. We've already mentioned that before. That was reflected in the latest positioning polls, which show speculators increased their bets against the dollar to the highest in 9 years, and at the same time raise their bets in favor of the euro. It is the highest on record. A deteriorating economic outlook has driven the U.S. Treasury yields across the curve to a record near record lows, and gold jumped to record highs on Wednesday, pushing further past 2,000 in the face of a weaker dollar. There's no doubt the dollar has made a cyclical turn now. The dollar is extremely expensive, and that's not sustainable given the current monetary policy stance, nor is it sustainable given the outlook for growth over the next few years. The dollar's weakness is reflected in a stronger euro, also driven in a large position shift that seems to net longs as big as long as they are before with the euro dollar. Peak in 2018. Seasonal patterns don't point to the euro dollar weakness in August, and the long-term euro trend is upwards. Following some hesitancy in the June and first half of the year, negative forces attracting or acting on the dollar have returned to the fore, and this in principle approval by the European Union, leaders to propose a recovery fund, and the associated euro dollar response has been the catalyst for a generalized move lower in the dollar, said Gavin Friend, senior FX strategist at NAB. The euro traded below 110 as recently as May, but the single currency soared around 5% in July, making its best monthly performance in a decade, with much of those gains coming after the EU agreed to a 750 billion euro recovery fund where it will borrow jointly for the first time, a major boost to the regional cooperation. With that, we're going to move into the analysis. So the euro still remains well bid with the potential to weekly levels of 927 followed by 956. Support is going to be 1816. So we did take out the highs and we were able to make it up to 1916 before we paired back. So we'll come up here. That weekly level was 927, 1927. Didn't quite make it there. Wasn't too far off. Missed it by 11 pips here. Pointing out that I thought they would be able to extend up to 1927 after the goose and those stops. I guess the thought that they only were able to get take out the highs by essentially 8 pips really may have concerned the market, and hence we've seen a pretty good little pullback. On the downside, we're looking at 1816. Moving on to cable. So cable posted its best close and is open to challenge 32 even. Resistance will be 32 with support at 30.41. Well, we did go on and reach 31.83, so came close. Came a little bit short though, just as was the case with the euro. So bear with me a moment. And we're looking at 30.41. There we go, add 30.41. Let's go move into the Aussie dollar. So the Aussie gun stops above 72 cents, finding resistance at the daily level of 72.44, which will be resistance for Thursday. Support will be 71.22. And on to the Kiwi. So the Kiwi saw mild follow-through buying on Wednesday. Resistance on Thursday will be 67 cents with support at 65.72. And on to the dollar CAD. So the dollar CAD broke low on Wednesday, taking out support at 32.72. Support on Thursday will be 32.12 with resistance at 33.40. The low so far has been 32.41. So we had 32.12. We're going to just stay with that. And resistance will be 33.40. That will remain the same. Let's go into the dollar peso. So the dollar peso finished the session weaker in taking out support. Resistance on Thursday will be 22.54. We see up in here, just below that. We're supported 22.20 right here. So just locked in this range here. And on to the dollar yen. The dollar yen held support at 530, finishing weaker for the session. In the middle of its range, resistance will be 594, with support at 507. Yesterday we had 530 support and 531 was the low. We've actually moved that a little bit lower, but it's actually held so far, so we're moving it down to 507 and upside 594. So the dollar index remains weak. Support on Thursday will be 92.41, and the low this morning was 92.52. 92.41 followed by 91.96. Resistance will be 93.01. So and on to the cross rates. Well, no movement here. Look at this. This Kiwi yen is just dead as a doornail. We're simply not moving. So no changes here in the Kiwi yen. And from there, we'll move on to the Euro yen. We have pushed a little bit higher in the Euro yen. Let's take a look where we stand here. I think we kept the 2506. Yeah, we had 2506. We actually pushed even beyond that 2558 resistance. Let's move this over here. Right there, which would be 2552. Hold on. Right there. It's 2552. That looks pretty good, pretty solid there right here. You see here we had this ridge come up in here. We there was a couple little minor stabs above it, and then finally jumped back on the way back down, held just before it got there. So it's probably a pretty good level right here, this 25.52. And support on the downside. It's actually going to be right there, 24.59. Let's go and move into the Euro odd. So in the Euro odd, we had 65.26. And we did come up here as high as 65.17. So that's held. And on the downside, we had 63.97. It's still in a tight range, even with the lows only 64.79. So we're trading in a very tight range. We'll keep the 63.97 for now. And let's go and move on to the Euro Kiwi. Well, we did make a run up here with this Euro strengthening. Look at that. And 78.80 is a resistance. That's fine. Keep the 78.80. On the downside, we had 76.62. That we do need to move up higher. We'll just go with 76.97. That might even be a little bit too low, but for right now, we can go and take a look on a 2-hour chart. Right there. For now, 77.94. On the upside, we had 76.35, which that's still good. I like the 76.35. On the downside, we did have 74.85. Support comes in a little bit closer right there at 75.28. And let's go move on to the guppy. Oh, we are gaining some ground here. Look at this. We've held that 38.72. Cable's had a pretty good push. I mean, not cable in itself, what I'm saying is sterling. Right there, which would be 39.27. Right. 39.27. And let's go move into the 2-hour chart for a little bit closer look for support. Coming in right there. $38.24. And moving on to the sterling odd. Resistance is going to be right there at 83.56, which we already had before, with support 82.18. That'll do it for FX. As you can see here with the euro dollar, coming a little bit off of these lows, but that's after tagging 1916 on the upside. And just taking a look at some of the underlying key NQ stocks. And you can see here on the Apple, looks like we have a little bit of a Greystone, Doji, Harami, and the Microsoft, which will need to push back up above 216. We're just a bit stretched here. The only one that seems to be doing fairly well overall is Amazon, but you can see here, Facebook, just continuous declines here, although still very high up there, but it just seems that we're a bit stretched here. We may have an evening start in NVIDIA, although they haven't come out with earnings yet. And you can see here Google, certainly something a bit similar, although not in as good a shape. You can see here with this consecutive down move here in Google on the daily, but obviously the Facebook has been higher, but we are under the 250, which is key, and you can see it's just been spent the entire week just going down, just slightly lower. So we'll have to see. I mean, I think we're vulnerable. And we'll close out with a quick look at indices. You can see here in the Nasdaq 100, we're just trapped in a very, very tight range. We did look at the underlying equities. They're still higher, but they just seem a bit suspect at these higher ranges where they're just basically not moving. I think I mentioned a couple times yesterday, it's almost like two steps forward, one step forward, two steps back. So we're just not get a little bit of a push, but then we come right back in. And then late in the day, we usually see some short covering as nobody wants to be short overnight. Looking at the S&Ps, similar, although albeit a little bit better shape. And then taking a look at crude oil. Crude oil did make a run all the way up to 43.50, although you can see on the 2-hour we had a very nice hanging man, and we since pulled back on that. And gold 2063 on the December futures. So that's what we have, and thanks for joining us here on the European Crossover webinar, and we'll see you in the chat room.